Okay, now what's the difference between a Schedule C versus the other income types that we've talked about?
Sure. So Schedule C is literally a schedule that's part of an individual tax return. So the annual tax filing due in April is called a Form 1040, and the Schedule C is a schedule as part of that return. So it's not a separate return. It's literally prepared with the individual return, and the business income and expenses are detailed on that Schedule C for that net business income. Versus with the K1 income, you're getting the K1 to input into the individual return, and ultimately on the individual return, that K1 income is getting reported on a Schedule E. And it's just in summary, this is the ordinary business income, Okay. Schedule C on the individual return is detailing out, this is the income, these are all the various deductions. There's the mileage worksheet on the Schedule C, or the mileage detail on it. So it's just essentially the same type of reporting, but on a simplified schedule on the individual return.
Okay, cool. Where would you use that in an instance versus, an S Corp versus LLC? When would you have a Schedule C come in?
You would have a Schedule C for a single member LLC. Okay, so even if you had your own LLC, you were the sole owner, and even if it was grossing $200,000, $500,000, it doesn't matter. You can report it as a single member LLC on your Schedule C. The only way that would change is if you and I owned a business together, we would not be able to file a Schedule C. We would have to file a Form 1065 or potentially 1120S for that partnership or S Corp return. You can avoid, and not that you would necessarily want to unless there's a tax benefit to do so, but you can have a single member LLC filing an S corporation return, okay, if you elect to be taxed that way, and then you wouldn't be filing a Schedule C. So it's if you have single member LLC, the minimum filing requirement is a Schedule C. If the S corporation election makes sense, you do that, and then you're filing that separate business or the S corp return.
Okay. And I think from a lending perspective, it's all going to kind of be the same flow. So I don't think it's going to really change how we look at things. It's going to be more for what you need to do to set your business up properly. Okay, so the next thing that we have brought up a couple times is K1s. I want to just touch bases on K1s from a lending perspective. What would the K1, when would that come into play again?
So the K1 income is going to come from the separate S corporation or partnership multi-member LLC return. And that the K1 is literally just that informational sheet that's going to show this is what your taxable income is from the business that's flowing through, and various other detailed items on that K1. That's also going to reflect your ownership percentage in the company. If it's a final year return, that gets reflected on the K1. All of that is kind of just summarized on the K1.